Greetings students. Today we are going to learn about one of Germany's leading bank, Deutsche Bank. Most of us must have heard the name of the company Deutsche Bank. Let us know this company in a much better way. Deutsche Bank AG is a German global banking and financial services company with its headquarters in the Deutsche Bank Twin Towers in Frankfurt. It has more than 1 lakh employees in over 70 countries and has a large presence in Europe, the Americas, Asia Pacific and the emerging markets. In 2009, Deutsche Bank was the largest foreign exchange dealer in the world with a market share of 21%. Deutsche Bank has offices in major financial centers including London, New York City, Singapore, Hong Kong, Tokyo, Paris, Moscow, Sydney, Toronto, Istanbul, Madrid, Dublin, Amsterdam, Warsaw, Mumbai, Kuala Lumpur, Sao Paulo, Dubai, Riyadh, Bangkok, Karachi, Belgrade, Manila, and Georgetown, Cayman Islands. The bank offers financial products and services for corporate and institutional clients along with private and business clients. Services include sales, trading, research, and origination of debt and equity, mergers and acquisition, M&A, risk management products such as derivatives, corporate finance, wealth management, retail banking, fund management, and transaction banking. On 26 July 2011, along with its second quarter earnings report, Deutsche Bank reported that Anshu Jain, head of investment banking, and Georgen Fitzchen, head of the German's business, will replace Joseph Ackermann as co-CEOs starting in 2012. Fears that Deutsche Bank could neglect its German roots and expand risk-taking activities prompted key members of the supervisory board to opt for the dual CEO model. Deutsche Bank is listed on both the Frankfurt FWB and New York Stock Exchange's NYSE. Deutsche Bank was founded in Berlin in 1870 as a specialist bank for foreign trade. The bank's statute was adopted on 22nd January 1870 and on 10th March 1870, the Prussian government granted it a banking license. The statute laid great stress on foreign business. The object of the company is to transact banking business of all kinds, in particular to promote and facilitate trade relations between Germany, other European countries, and overseas markets. Two of the founders were George Siemens, whose father's cousin had founded Siemens, and Halske and L. Bamberger. Previous to the founding of Deutsche Bank, German importers and exporters were dependent upon English and French banking institutions in the world markets, a serious handicap in that German bills were almost unknown in international commerce, generally disliked and subject to a higher rate of discount than English or French bills. Deutsche continued to build up its presence in Italy with the acquisition in 1993 of Banca Popolare di Lecco from Banca Popolare di Novara for about US $476 million. In October 2001, Deutsche Bank was listed on the New York Stock Exchange. This was the first NYSE listing after interruption due to 11 September's attacks. The following year, Deutsche Bank strengthened its U.S. presence when it purchased Scudder Investments. Meanwhile, in Europe, Deutsche Bank increased its private banking business by acquiring Rute Blas and CIE. Business by acquiring Rute Blas and CIE 2002 and the Russian investment bank United Financial Group 2006. In Germany, further acquisition of Norris Bank, Berliner Bank and Deutsche Postbank strengthened Deutsche Bank's retail offering in its home market. The series of acquisition was closely aligned with the bank's strategy of bolt-on acquisition in preference to so-called transformational mergers. These form part of an overall growth strategy that also targeted a sustainable 25% return on equity, something the bank achieved in 2005. The company's headquarters, the Deutsche Bank Twin Towers building, was extensively renovated beginning in 2007. The renovation took approximately 3 years to complete. The renovated building was certified LEED Platinum and DGNB Gold. Deutsche Bank was one of the major drivers of the collateralized debt obligation (CDO) market during the housing credit bubble from 2004 to 2008, creating $32 billion worth. The 2011 U.S. Senate Permanent Select Committee on Investigation report on Wall Street and the financial crisis analyzed Deutsche Bank as a case study of investment banking involvement in the mortgage bubble, CDO market, credit crunch, and recession. It concluded that even as the market was collapsing in 2007 and its top global CDO trader was deriding the CDO market and betting against some of the mortgage bonds in its CDOs, Deutsche Bank continued to churn out bad CDO products to investors. The report focused on one CDO, Gemstone 7, made largely of mortgages from Long Beach, Fremont, and New Century, all notorious subprime lenders. Deutsche Bank put risky assets into the CDO like ACE 2006 HE1M10, which its own traders thought was a bad bond. It also put in some mortgage bonds that its own mortgage department had created but could not sell. From the DBALT 2006 series, the CDO was then aggressively marketed as a good product, with most of it being described as having level ratings. By 2009, the entire CDO was almost worthless, and the investors, including Deutsche Bank itself, had lost most of their money. Deutsche had become the biggest operator in this market, which were in form of credit derivative designed to behave like the most senior tranche of a CDO. Deutsche bought insurance against defaults by blue-chip companies from investors, mostly Canadian pension funds, who receive a stream of insurance premiums as income in return for posting a small amount of collateral. The bank then sold protection to U.S. investors via the CDX credit index. The spread between the two was tiny, but was worth $270 million over the 7 years of the trade. It was considered very unlikely that many blue chips would have problems at the same time, so Deutsche required collateral of just 10% of the contract value. Deutsche Bank has a negligible exposure to Greece. Spain and Italy, however, account for a tenth of its European private and corporate banking business. According to the bank's own statistic, the credit risk in these countries are about Euro 18 billion Italy and Euro 12 billion Spain. For the 2008 financial year, Deutsche Bank reported its first annual loss in 5 decades. Despite receiving billions of dollars from its insurance arrangement, including US $11.8 billion from funds provided by US taxpayers to bail out AIG. Based on a preliminary estimation from the European Banking Authority (EBA) in October 2011, Deutsche Bank AG needed to raise capital of about Euro 1.2 billion, US $1.7 billion as part of a required 9% core Tier 1 ratio after sovereign debt write-down starting in mid-2012. So students, we got to know about the various aspects of Deutsche Bank. We went through the company's history to its present market scenario. Hope information about the company was useful. Have a nice day.